Hello, 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 everybody. How is everyone doing this afternoon? A little choppy back and forth day, but now we got a good roadmap, at least for me, going into tomorrow and Major Op X Friday. We'll take a look at everything. So, hope you didn't get chopped up. Good afternoon, Davey. Good afternoon, Patrick. Hey, Gary. Welcome, welcome, welcome. Stupid money. What does stupid money do? Then you have dumb money. What's the difference between dumb and stupid money? I just need to know. And I think money is sort of neutral. It's how it's utilized. So, a whole lot of movement for a little gain in the SPX. Yeah, a whole lot of. But what kind of day was this? Would you categorize this as trending or the 70-80% that is the choppier kind of days? Let's start the show. Hey, hey, Mike. Hello, George. Hit the mic like button. Good afternoon, Amadeus. Also, we're at 5,498 subscribers. If you're watching this live, and some people watch this live and don't comment, and I don't know why. I do not bite, although some people think I might. Please do consider subscribing. If you're watching it on a replay, be one of those couple additional subscribers that gets us to 5,500. Never thought that a silly little technical analysis channel that likes to piss people off, especially with Tesla bulls, would get to 5,500 subscribers. But you know what? Gotta say it the way it is. Gotta say it. Good evening, Anissa. Thank you so much for being here. Chop, chop, chop. Hey, Mike, you gonna do anything special that you had 10? Well, all right. When I get 10,000 subscribers, I will give something away to all the key I'll do some special thing. I'll do something special for 10K. Let's get 5,500 first. But we'll do something special. If we can actually get this channel at 10K, that would be amazing. Amazing, since we don't go off they try to clickbait or try to do silly little things to suck people in. I think we do excellent analysis. But by the way, Sterling, since you're here, Sterling does run. He's been posting stuff on the Pat Twitter account. He's learning this stuff, and he didn't know I was going to ask him. Sterling, have you been able to learn and apply a lot of this stuff from your perspective? Have you really been able to grasp it and apply it and find that it helps? And answer honestly. He doesn't get paid for running the Twitter account. We're a very small firm. It costs me money to run these live streams all the time. So I just want to know, because I want to know if this is legitimately, if people apply themselves, does it help? Does this information help? Because trading and investing is, and as I'll say, is trader and shorter term investing is a tough game. And there's a lot of crap out there. And I really want to know if we're providing a decent service for people tuning into this stuff. By the way, mixed day, oil up. I'll answer a question too about how I view stuff with the long term double top pattern and with the potentially refilling the strategic petroleum reserves at 80, how I view that. We'll get into that a little. You can see a little bounce back. Tesla, stupid option volume. I mean, literally. First off, we had massive call buying, obscene call buying over, like last time I checked, there's over 250,000 contracts of call contracts going off today. 300s were one of the key strikes before, and that was going off before the announcement that the expansion of Germany, why is it a friggin' gigafactory, by the way, would not be expanding, and then they weren't going to produce batteries. Miraculously enough, you get all this massive call buying. Again, since I've already pissed off so many Tesla people over the last few days, might as well continue. Might as well fill up my stuff with more hate stuff. Yeah, if you want to know something, do a little correlation study between bad news dropping or right before Elon selling and massive call volume going off. Very obscenely high correlation between the two. Obscene, well, actually, three things because I listed two different things that generally happen because Elon doesn't sell all the time. But when you see, especially a string of massive call buying, people were wondering if we're going to see him selling with the Twitter thing. If this call buying continues, I think it will be getting some Elon selling into it, especially where the Twitter thing stands now. But separate from there, if you just go off the bad news, when bad news drops on Tesla, you look the day before at the call volume that goes off right before the bad volume. Just saying. I mean, if we had some actual regulators that would look into something, they might find something there. Other than that, I'll shut up about it. So, sorry to bore everybody. Love the Twitter stuff. Nice to know I'm looking at the same stuff sometimes, especially on ES. Made my head swell today because she said thank you, Mike, in response to a post I made. Well, you know what? This stuff, thank you, Sterling. And I'm going to give a big shout out for Sterling. And yes, does Sterling, full disclosure, does he sometimes ask me a question? Is this valid? Is that valid? Yes. He comes up with the levels. He comes up with the stuff. And I do, you know what? He is part of this, learning the stuff that's being taught from this live stream. I really wanted that because he's not getting any special, like I might answer some extra questions for him, but he's not getting hidden secrets. There's no hidden secrets that Sterling's getting that I'm not sharing with everybody else here. So I just really want to know if can it be applied, because this would be an interesting study for people saying, oh, you can't learn to trade or learning to trade is tough. Yes, it is tough, but I believe it can fully be learned. And then learning key concepts and repeating them, I think, is very valid. So let's see. To answer your question, everything I post has been learned from you these live streams in the last 7 months. Do you find it is valuable and helped you? Have you gotten better at this? Have you gotten better at trading and analyzing the markets? You know, are you seeing stuff play out? Are you able to spot stuff? Are you able to map out the moves? Are you able to take advantage of the moves? So boring compared to yesterday. Well, you get these kind of days because that sets up for the next great days. Remember, you need the boring to offset the other days. Tomorrow, do not ignore 7:30 Central Time. We got retail sales. Retail sales forecast flat. Previous flat. Let's see how that comes in. Then we got continuing jobless claims. Remember, that already passed our 1456K. So technically by a percent increase, not an absolute number, the 1456K, that was a short term write down that number because it mattered once it passed that from a percentage increase. Percentage increase wise, once it passed that number, it's a very historical recession indicator that we're going to tip into a recession, or we're either right now tipping in or on the verge of tipping in. So now you can discard that 1456 number. It's already fulfilled. You don't need to remember it for future because there'll be a different percentage increase. Initial jobless claims forecast slightly higher than previous. Fed manufacturing still looking to drop from previous, but still an expansion territory. We're going to still keep an eye with the Philadelphia index. Keep watching for prices paid, and keep an eye out for the Empire State Manufacturing Index, which is in contraction, whether that bounces back. Those are more minor, but all this is out in conjunction at 7:30. Then during the live stream, we have industrial production, more minor month over month and year over year. Capacity utilization. Going to watch in case that drops off pretty substantially. Business inventories, eh. And then beyond that, just to keep people going with this, we have not much on Friday besides massive OpEx. Quad witching Friday, massive OpEx. The key strike is still 4,000. Why am I bringing that up now? We still also favor that 75 basis point hike. This 100 basis point dropping off a little. Ignore the last price. Zero gamma, I doubt we'll get back to before OpEx. Any, though, rally back to 4,000 keeps us in negative gamma, and negative gamma changes a lot when your massive theta kicks in, especially on OpEx days. So we could see some very amplified moves on OpEx days. I didn't even have a chance to look at LightPath yet this afternoon, but that was all I was going to glance in at. And then tomorrow, there's nothing during the day. Tomorrow after close, I will look at Adobe. So why I'm bringing all this up is because, besides the little short-term patterns, this potential buy above today's high. Now, that would be confirmed on a closing basis. This, again, how could this be traded? Intraday on a break above today's high. Intraday, I'd watch for a break and a retest of that high area and then a roll-up. If it goes into and it sustains a close, it could be a continued bounce, especially around that 4K number for Friday. That is going to be a magnet, not only because of OpEx. Still going to watch, even though we filled this gap from before, we have a lot of magnet back to this 4K area. And that 50% retrace, let me actually, let's just see where this 50% level goes back to, or the 37.5 is about 40.21. And the prior 50% level was just glancing at that is about 40.29. So on any move up, that's going to be very, very key. We did get a couple try to break down move, but as Sterling so apropos pointed out, this was the key breakdown, and we closing still. Watch the closing. Even if you tried to front run, on this 5-minute, fine. Breakdown. Oh, okay, we're coming back to retest the breakdown area, trying to break down. So even if then this is where I like to try to get something off and move down a stop, especially when you have this kind of pattern. Why? What did this form? Little mini double bottom. You got the close above it. This also turned into fairly decent stop hunting with buying pressure. Got the double bottom, the quick reversal, the close back above the midpoint. So what am I also watching for? What would we call this pattern? I know some people know this pattern. Break through one side, past the midpoint. What do you think I'm watching for now? I know we know some of these people know this. So let's see. It's a little bit of learning curve, but worth it. Old dog and all, unlearning old bad habits. Well, that's part of it too. I will say, since I've been watching this channel, I've improved my trading. I think in the last 3 months, I've had 5 down days. Well, that's impressive. And that's with trading every day. That's actually very impressive. And I'm not saying this for anything to do with my ego or Bob's ego. We are literally trying to help people. That's why I'm here every day. I'm literally trying to give away a lot of stuff and help people. Sterling, I lost 85. And just a reminder, I have not talked to Sterling. Sterling did not know I was going to ask him any of this stuff. Anybody can reach out. Sterling's on Discord too. So if you want to verify it or have a private chat and verify that with Sterling, go right ahead, because I have not prepped him for any of this. I lost 85% of my trading account in 6 months before starting to learn from you. I'm now tracking 12.43 annual rate in this crazy market. And You know what? If you can get that kind of rate after blowing 85% of your account and doing it in this market, then you are, you know, you'll still have learning curve things, but that's a great turnaround. That is fantastic. Look, if people would give year after year, if you can get even a 12% rate year after year, a lot of years, and on massive up years, you'll beat that because trading gets really easier. But think about that. People will take that. People can make a living if you have a big, decent account size off returns. Uh, Thanks to Mike, I've learned to reduce my risk and losses at stage 2. I know enough to be scared, less making a trade, going to stage 3 where I feel comfortable making a risk-based decision. Well, that's excellent progress, Daniel. Excellent progress. Coco, bear trap is, well, I wouldn't call this a bear trap. This would be called, as we call it, a shake and bake. If you want to call it a, because shake and bakes can happen both bullish and bearish, but if you want to call this little breakdown the bear trap, and then we get the snapback rally, which I'm now watching for, not only because we have the shake and bake, we have that daily potential buy signal, and we have that 4K magnet with OPEX. We got a lot of potential. Does that mean that it's guaranteed to the upside? No. Again, just because you have multiple signals pointing in the same direction, they are not additive. You can't say we have a 50% odds and a 50% odds, therefore we have 100%, or we can't have 70 and 60% and we actually have 130% probability for an upside trade. You know it doesn't work that way, although based off of a lot of traders and the way they do new math in this and the way they ignore blatant stuff staring them in the face, I wouldn't be surprised. Can harmonic be used in crypto? Yes. The merger can distort things, okay? Just as, and that was a question I'll touch on with Sterling today, asked on a short-term pattern in Twitter. I'll give you an example just with something. When you have a story stock like Twitter, because why is it a story stock? You have the signed merger and M&A agreement. It's now sitting in the Delaware courts, the Chancery courts. It's a story stock. Can patterns still work? Yeah, but I take them with a grain of salt because for the research I've done. Now, first off, we couldn't do research on every, when you're running like double patterns, automated and everything else, you're not going to be able to filter out every time something becomes a story. All right? And because it would be going back through way too much data. However, then when looking at stuff and fine-tuning it after getting the results, when especially shorter-term patterns, whether it be a story stock, a story commodity, hey, you could get it in the foreign exchange world. Let's say you have constant bank intervention. It's going to change the probabilities because you have an outside factor. All right? So generally, especially with short-term patterns, I take them with more of a grain of salt, like a 5-minute or 15-minute pattern. You know, daily patterns, unless something's in complete pegged due to M&A structure where you just see that price going sideways because it's virtually a done deal, which the Twitter thing is not. You got to take your patterns somewhat with a grain of salt. Also, let me just tie in the crude real quick. So, how do I look at this? If we actually have the floor in the first targets at 77.76, right now I have a upward bias long term. I'm still going to utilize these patterns. We now have potential government refilling the Strategic Petroleum Reserve at a higher target than the first target for that double. So, based off my research, would that theoretically change the odds? Yes, because we might have a floor price above a target, and that's an artificial floor price put in by something with very deep pockets. All right? Long term, could we, with a recession, could we definitely see, yes, I'm expecting longer term a major rollover in crude prices. As we approach this 80 level, if there's any short trades, it's taking off profits and aggressively moving down stops. Why? Because if there's actually going to be a lot of buying pressure at 80 and below, you got to take that into consideration as an artificial floor. Okay. Now, if we get other additional crude inputs, I'm still going to trade it from a technical perspective. If we get other artificial crude inputs, I'll give you another example of what would be an artificial crude input for a short duration. Let's say we started to get 1 or 2 hurricanes in the Gulf or in the Caribbean that could target the Gulf. No, that's not a long-term thing. But for a short term, for a 2 to 3 week period, it can definitely have an impact on crude prices. So that would be an artificial input. Just like with the draining of the SPR has had an additional effect on gas prices going lower for an extended period of time. So let's see. Then I just wanted to explain that. So am I throwing these targets out the window in crude? No. Am I going to take the additional information into account? Yes. Because I'd be silly not to, because this is an external event that will modify the probabilities. Now, let me get to some other stuff. You have taught me where to look sectors, what to look for, setups, when to get in, triggers, when to get out, take profits and stop losses. Still daunting, but I'm much more confident. So it can be learned. It's tough. To be good is tough. Get good at this stuff longer term is a lot easier. Like to spot weekly double bottoms, pullbacks, even daily double bottoms or daily reversal trades or daily continuation trades in a strong bull market, that's easy. So if you can get stuff down in this kind of market, when we get into easier markets, as long as you're continuing to always manage risk, you'll do fine. You're welcome, Chris. That's why my name's Money. Hey, and again, if anybody wants to support the channel, you can always do a donation. CLBS, please. Let me just jump to that real quick. You asked for that this morning. Thank you for being here. So, CLB. Don't even tell me where you're in at. Wow. This again. I don't even want to know. I don't even want to know what this thing is. EPS negative, no P to E ratio. Looks like people are trying to pop it, but this is not positive price action. Look, you get the pops, boom, boom. So there's definitely severe selling pressure. You get a pop that holds? Yeah, but wouldn't count on it. The only thing that would be interesting is if you can get a pop above about 75 that holds on a closing basis above 75. I mean, there's probably some floor in here somewhere. But I'm sorry, if you're in this long term from a much higher price, you're so now. If you're looking for a pattern, this is, again, these kind of things aren't going to trade as reliably. This is confirmed. So if you want to try to apply, the patterns will still somewhat hold up. But if you want to apply something, it's confirmed, but I wait for a close above 59.33. A close above 59.33, and this is completely valid even for a short-term pop. But I'd be focusing on 68.9 and 73.6. Okay? If you can get that close then above that 75.5 and it holds there, then it could turn potentially into a slightly longer term pop. Other than that, there's nothing. So that's the only thing you got, Dark Screen Sleep. And I hope you learn to play some more sensible stocks too. One of the most valuable things you have taught me is position sizing. Before I was swinging for the fences, you made the connection for me when you said if you're scared your size is too big. Yeah. And is slow and steady wins the race. Position sizing is key because that takes risk into account. I've also learned to only take trades that have the higher probabilities. I don't trade as much now, but win rate is higher and I make more on winners and lose less when wrong. That's the key. And you don't always have to be trading. You wait for the higher probability setups. And you're still going to have losses. Still. Because there's no way in investing or trading to avoid losses unless you think you're some amazing diamond hands and going to be a complete moron and just hold stuff forever. AKA Cisco 2K people. You're watching. I know you watch me because I talked to you about it. And I'm going to still pick on you holding something 22 years after the fact. If you think about trading like dating, you don't just date anybody. You are selective, and you should be when trading. You haven't talked to Bob before he was married. Don't repeat that. Oh boy. Just kidding, Bob. Some people date just anybody, but you know what? Maybe their win rate's not very good. I wants to what you wants to trade some other stuff. Well, get your account back and learn to trade some good quality things. Dark Screen and keep tuning in. You probably don't have time right now. Can I have the coordinates number for the harmonic? For what, John? Again, I need. You mean for Ethereum? The overall harmonics? Here are your key levels. The major levels, this is still technically in play, although it's horribly. I'll give you the major and minor levels. So your minor is going to be off these most recent things. And look, here, what do you think I'm going to say for the minor stuff? What level are you going to be watching? Already rolled back to 50 to 62.5 and rolled back down. Okay? Actually curious to where this flipped the other way. Oh boy. Straight back down to the 62.5 the other way. So, here's your minor levels. Just put on your harmonics. You start breaking down, you get the close below about 15 51 15, sorry, I can't read the level. It's roughly 1555, 1560. You get the close, then I'd watch for a retest of the lows from the end of August. You still favor technically lower prices in this. You get the close. You could literally, I think, make a pretty good trading living just using the 62.5 level with appropriate stops and targets. And the targets I've already given you the targets. You get a close above 1651. I'd be watching for the return to 1743 to 1789. Then those are your short-term levels. Your longer-term levels, for the downside, the major breakdown play is still this horribly sloppy head and shoulders top. 1311. You get a close below there. I'd watch for a retest of the lows back from June. Other than that, Those are all your key harmonic levels. Other than that, if it does pop to the upside, the key level I'd be watching for another major top area would be around 22, 23. And that's, you have the shorter term levels, which would take you to the highs. And if you went through the highs, that would be my next target. If the rollover, I gave you the shorter term levels that tip the probabilities in your favor to return to the lows. And then you have your next breakdown levels for the lows. Longer term, I'm watching for the continued I think we're going to see Ethereum back way lower longer term, just like Bitcoin. And then we'll get the flush out move. So that's how you do the levels. Hey, Waka Waka. If Dark King Street wants a garbage stock to trade, but take a look at FSR of a valid double bottom on the daily or just the weekly. That is no, that's not a double on the weekly or the daily. If you're in doubt, just go to a higher time frame. And how many bottoms do you see here? 1, 2, 3, 4. 4 bottoms on Fisker. I'd be watching for the next rollover play on this thing too. So no double bottom there. You look at Baidu. I will look at Baidu. Then we'll get back to the. Again, remember, you don't have to trade it to be able to learn. And analyzing stuff that you don't even trade is helpful because then you can follow up on it. A market is a market. Yes, there's slight nuances of commodities versus stocks versus FX, but you can do your macro analysis all the same. It's why I teach what I teach. I'd be really watching for this breakdown play in Baidu. Just doing it off this here. If we break below this 128.72, my target would be closer to 122.30. You get below there, it's going to be a retest of the lows. And right now, we're back closing on the daily basis below there, but you have some pretty decent support right here. I'd also watch for, you got a magnet price down here. So especially starting next week, I'd be watching for the rollover play with the magnet price. This would not be something I'd be looking to get into the long side right now at all. Unless I got a great bottoming pattern in between the 50 and the 62.5. Because you get the close below 122.30. You got your gap fill to 119.32. And I would be targeting a return to that 108 to 101 levels. What could make me bullish? Well, look at, there's one key thing I notice on this chart. Does anybody else spot it? Because anybody else spot it right I'm looking at? It is broke above the 200 simple, retested, close above it, close above it, close below it. Right here. Remember, it's an area. You got a quick little close above it, but back below it, sell, retest, sell, 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 sell. So what would have to happen before I'm at least at all interested in Baidu from the long side? What do you think it is? And if I get some little daily double down here or a 4-hour double, could be played for a minor corrective pattern? Yeah, that could be a minor pop. But what gets me at least more interested from a longer term perspective, and that's only minorly interested. Why? Because look at this. I'd need at least a weekly close back above 150. That would take it above the 200 weekly. All right. Now here's your problem. Here's why I love to teach clear paths moves. For example, there's nothing here for me. The thing here, what's here to the downside? What do you see here to the downside? You have a little clear path move down to beyond the gap fill, down to about 117.50. Then you have another clear path move and another gap down to, this 104 between this major bottoming area. On the weekly, you have this clear path move. What don't you have to the upside? Here's why. Upside on this would be super challenging to trade, even once it closes back above the 200. So I wouldn't even bother looking at it from a longer perspective. I'd set an alert here. If you get a weekly close back above the 200 on a closing weekly basis and you got to trade it for some strange reason, that's when I might consider looking at it. But where I have targets to the downside, clear path, and we have two gaps to the downside, I don't have a lot of stopping points. I have a minor stopping point. Remember, like minor stopping point, little hitch right in here. Then I don't have many stopping points back down to here. You see how easy this with gap magnets to the downside? The short is the easy trade in this. All right, the long, we just go back to the weekly. Close above here, stopping point, stopping point, stopping point, stopping point, stopping point, stopping point. Finally, you're getting a little here. You see, this is a simple clear path. But even if you get a close above this key close at 177.64, yes, this is considered a clear path. However, in a clear path move, you have to target what's called the breakdown zone. So you get a close above 177. 185 is your breakdown zone. Boom. Does that give you great reward to risk? No. That's the challenge with this. And then even if you start to try to look on the daily, look, there you don't have anything to the upside. You don't have any clear paths. Maybe just a little bit up to that 200 above this 145 area. You have a little clear path, but that's just slamming into this prior resistance. Look at this. This is absolute nightmare trading. So if I saw this and you said, are you going to trade this to the long side? I'm going to find easier things to trade to the long side. I don't need to touch Baidu. Now, to the short side, especially below 122.30, now we're talking. We got gap magnets. We got a couple clear paths. You get the close below the 62.5. We have the magnet besides the gap fill magnets. We have the magnet to the 87.5. Now we're talking. Now you want something to the long side. See, what do I have here? Let's see. What do I have here? If we're going to get a pop, what do you think would be an easier trade to the upside? Let's see. Make trading easy, because it's already tough enough. Make trading easy. What's this? What is this? I know everybody knows this. It's a rhetorical question. It's a friggin' potential double bottom. Could this be traded in Apple? Yeah. Could it then be potentially rolled into a gap fill play? Yeah. Is that to buy Apple for a retest of 200? No. It's to buy a quick little bounce swing trade on Apple. That could be a long trade. You're also, look, is it slightly lower probability? Yes. It's against the daily rotation zone. It's, the weekly is not a play here. It is slightly lower probability. But it could easily eke out, look where the 200 is on the daily. Could it still eke out? That could be a retest of the daily. 200. So, yes, it's slightly lower probability. And then you have the gap fill. So what would I especially play it to? That 200. Then if you wanted to try to roll it, you have a gap fill. But do I have a pattern here? Now, is this a potential bigger double bottom? Yes. Is it a long way off from triggering? Yes. Could it theoretically trigger? Yes. And that would be another upside play. So if this triggered, would I have? I'd take this over a Baidu any day of the week. Any day of the week. Why? Because I have probabilities. We have a lot smoother moves. You see the difference? Now, because I pointed this out, can Apple tank tomorrow and go through the lows? Yeah, because these have not been confirmed or triggered. So you don't just go, hey, Mike showed me a potential double bottom. I got to go buy Apple. Just like all the morons yesterday that bought Apple without a pattern. And then they'll say, look, I was brilliant because you waited for the pattern. I bought before the pattern. You didn't have any probabilities, you moron. You were just guessing. Apple could, we could still tank tomorrow. Then you won't say anything to me. You're going to need the Squeeze Miracle Dark Screen Sleep. I just hope you're learning your lesson with these stocks. You're welcome, Gary. I wanted this to make sense to everybody here. Does it make sense to don't try to trade difficult stuff? Don't get married to trading a specific stock forever. And also know where your stops are for long-term positions. Because you know what? The stock gets into difficult. Let's say it stops out of long-term buys. You take your stop. And if there's no good trades, don't trade it. A question about VIX on September 12th, day before yesterday. Better not be a tough question, Sterling. It was up 4.74% that day when the S&P was up 1.09. Was that indication of what was coming? No. It was indication of hedging. You can't... And I'll give you an example that the CPI was not leaked. People did not know. You had many people expecting better. It caught a lot of people off guard. Even the White House was going to have a press conference touting how great it was going to be, and it was a huge miss. That was people hedging. We already went on a multi-day rally. You went on a multi-day rally into a very volatile CPI number, so there was a lot of, okay, I'm going to buy some protection going into this. I was going to buy some protection right here. Then we had the big follow through. This was with the markets going up and VIX going up. I talked about that. That was people. I go back and watch the recording. I know I mentioned that. I said that was generally because that's a more rare thing when you have the VIX go up and the market's broadly going up. It was people going into the CPI number, buying some downside protection, especially if they didn't unwind their current positions. Remember, a lot of people don't necessarily unwind, or a lot of bigger players or institutions don't unwind things on a dime. So what do? You put on more protection. You put on hedges, especially broad market hedges. You can hedge your whole portfolio with S&P options, OEX options. You can hedge a whole portfolio if you understand how your portfolio beta is structured, and you understand how with the number of options to buy for portfolio protection. Let's say you didn't want to get out of your portfolio, but you're worried about a bad, or if the market does sell off on the print, I don't want to be exposed to the downside. You could be putting on protection. Well, what does that have to do with the VIX? Well, if I'm going to hedge a whole portfolio, I'm going to use something like the S&P options. Or technically, you could do it with futures, but think about it. Why? Because am I going to hedge a whole portfolio unless my portfolio is only constructed of Dow stocks with a Dow 30 or even a NASDAQ 100? No, I'd rather have a broad market base like a S&P 500 to hedge a whole portfolio. And then if the portfolio hedging is coming in and there's a pressure, what do you think, especially market makers, are going to do if they're selling a lot of protection? It actually raises the implied volatility, because that's the one thing you can do to actually build in more premium for what you're forced to sell. You sell it at a higher price. How do you get a higher price? You have to have an implied volatility that's higher. So it was no indication that CPI happened to miss. This was people hedging into CPI in case it missed. It wasn't that, oh, did people know that it was going to miss? No, because you can look, there were a lot of huge institutions that were caught completely off guard from where they said the number they were watching. That's why I want the market to go up. So people like Dark, the market could go up in his stocks. And I'm not picking on you, Dark Screen Sleep. I'm really not. I hope I would rather have people learn to do this properly. And sometimes it takes losses, just like Sterling said. He lost 85% of his account. That doesn't mean you can't recover. Sometimes it takes some losses to realize what you were doing is not a viable trading or investing mechanism for long-term success. And the market could go up, and Dark Screen Sleep, unfortunately, could still get his butt handed to him because he's in a lot of Reddit crap stocks. The market could go up. I'll give you an example. The market could rally its friggin' ASS off, and there's still a lot of Kathy Woods crap that's going to go down long term. Who she went on a buying spree yesterday. She's not done buying the dip, like a bunch of other people I know, and I just found that out today. You can use ETFs to hedge. You can use spider options and everything else. But if you're trading spiders or spider options, it's going to play into volatility also. Especially spider options, because it rolls back into the S&P because a lot of the spider hedging is done in the futures. And sometimes the simplest explanation is the best versus going down. You know what? I'm all for a good conspiracy theory, and I will let you know when there's some numbers that I think are massaged and stuff, or stuff's done for strategic purposes. If they were going to do something for strategic purposes, they would not have a huge miss or a decent miss in the CPI. And you would have seen you would have seen a lot different reaction if it did not catch a lot of people off guard. All right. NASDAQ, potential buy above today's high, 12,253. Same thing. If it's going to play it intraday, it's got to sustain a close, and that would just be a close for a potential bounce tomorrow and Friday with OpX. That's not an extended thing. It's not like I'm going to buy it here and we're going to whatever Coco's latest insane target is. That would be for a short-term bounce. And by the way, when I mean short-term bounce, I'd be watching. First target would be about 12,330. Next target, 12,400. Next target, 12,533, the 50% retracement. And that would take us back to the daily rotation zone. Dow, Same broken story. Aggressive buy above today's high. 31,392. Wait, I didn't go over anything to the downside with these. It's pretty obvious. Let me just take this off real quick. Pretty obvious the same levels I'm watching. About 39.42. Below 39.42 would be 39.20. Below 39.20 we got 39.09. Then we have 38.83 to 38.78. Those are all your downside levels. NASDAQ, your major support coming in about 12,083. Your other key support, I'd be watching back to about 12.2 and then 12.140. I don't need to go through everything in some of these. Let me just get through a couple of markets. The harmonic next thing holding nicely. It would be a super aggressive bounce on a close above today's high. Same play in the notes. I'd be preferring to be playing the S&P first and foremost on any bounce trade. We don't have a strong bottoming pattern in here, and that would just be for a rollover trade, and there's no double there. Anything also above this 115.07 would be targeting to the breakdown zone. About 115.19 again. Dollar index. This is a pretty bullish still candle. You had the return. Oh, sorry. I was trying to put that on. See, holding up in the upper and closing roughly at that 12.5% harmonic and staying definitely above on a closing basis at 25. So far, holding above this. I will be watching for the continued, the continued follow through play to the upside. Still in the dollar index. Crude, looked at this before. I'm still watching for the break and a fully daily close back above 89.50 for a play to the upside. Right now, the downside is you got cycles at the top. So I definitely need that to close above there. Or we need the pause before anything. But on any dips, I will be watching for a retest of this low area for a potentially more significant bottoming pattern. I already gave my thoughts earlier on that. US dollar, Japanese yen, yes, potential double still in place, but I'm really starting to watch for a break below 142.70, and we could get some sustained intervention from the Bank of Japan in the yen. So be careful with that to the upside. Euro, either watch. I'm expecting more of a breakdown play, especially with continued dollar strength. So on a move back below the low from yesterday, I'm targeting 99.27 and then the most recent lows. Bitcoin, again today, closing below the 62.5. So we have short-term bearish, long-term bearish. So any rallies, especially the NASDAQ rallies over the next day, we'll be looking for sells because we should easily return to 19,061 to 18,527 before the next major breakdown plays. Tesla, I mentioned before, the massive call option. You did have intraday plays in here. You had a double top pattern right there. Yes, this is a double bottom pattern that was triggered going into the close. So you have 303, which gives you targets for tomorrow, 303.54, 304.31, 305.08. And yes, even if that triggered tomorrow, you'd still have this decent daily potential double top. It did fill the whole gap today. So the next breakdown play would be below 290.40. But I'm going to see if we get some follow through with the absurd call volume today. So I will be watching, especially tomorrow morning with that little upside. And then if we take out there, still the major target area, 311.59 to 313.94. Gary lost his button currencies. It can be done. You can lose your button anything if you don't have the proper trading strategies. How was the volume today? Well, don't you have it on your chart, Sterling? Sorry, I hit the wrong button. The volume was decent. Why was it also decent? And you got to take the green bar with a grain of salt. Why was it decent? Because of this. All the back and forth, especially this more. Look at all this back and forth. Look at all this. You had some decent volume buying on these dips. So, I mean, this wasn't a closed green, which is, why I'm watching for that continued bounce. So the volume was way better than back on the 9th. Another reason I'm watching for some continued follow through. Now, keep in mind, if you start seeing this 390.42 or you give it a little more room, 390.30 areas start really breaking down, all these people bought today are trapped. You'll see some downward acceleration. Because if this does not get the follow through, then it's going to be interesting for a retest of 38.84. But volume, to answer your question, was decent. I invested in those garbage stocks because of some YouTubers during bull market. Now I only trust Mike. Those YouTubers needs to be jailed. And I'm not defending those people. A lot of them don't know any better either. They just don't know any better. You have so many people, and some do. And some were pump and dumping it. And those people I have no sympathy for. A lot of people were they thought that was the way to trade. And it's not. And there's still people pumping this stuff. And you don't just need to be the only person you trust is me. That's not my goal here. You got to find reputable people. Okay? And there's a lot of crap in this industry. And there's been far more crap brought in since COVID. People at home getting paid to sit at home and, I might as well become a stock pumping YouTuber that pays attention to the Reddit boards. It's gone downhill. There's always been the crap in this profession because there's a lot of money thrown around. So you got to be very picky. There's people who run funds that I wouldn't trust to walk my dog. Especially that trade in some stock I will not name and pump stuff on YouTube all the time. And I'm not talking about the head of the stock I shall not name. I'm talking about people who have it as a major play in their funds. Wouldn't trust them to walk my dog. And they know exactly what they're doing. Sadly enough. So it's not just that you have YouTubers. You can get a lot of riffraff in this industry. And riffraff can get away with a lot of stuff for a long time. So learn to do things correctly. And when you find, it's not just me, when you find people you can trust, learn from them. Learn everything you can. And then make it your own. There are no shortcuts either. You know what's funny? You want to know if I think I'm going to do this. I think I'm going to go, the one big secret, because I actually think there is one big secret. I'll probably even title it that way to see how many views it gets. The one big secret is money management. And when I talk about money management, it's reward to risk and position sizing. That's the one big secret. You want to know something? If I put out a video titled One Big Secret, Risk Management and Position Sizing, and looked at that video how many views it gets, versus the one big secret, the trading system you must know. Which one do you think is going to get more views? The sad part is, yeah, you can get great entry systems, great ways to manage positions, but everybody wants to know that. The sad part is the one big secret, even if you have great entry systems, if you don't manage risk and reward properly, you don't manage position sizing properly, you can blow up your account. Everybody wants the one secret system. They don't give a crap about learning. What do you mean? It's reward and risk and probabilities and position sizing. I don't want to hear about that crap. I want the magic system that tells me when to buy and sell. Guess what? If I gave you a magic system that told you to buy and sell, I've showed you stuff that works over 70% of the time. I want one that works 90%. Then you're just an idiot. But separate from that, let's say I gave you one that worked 90%. There'd be a lot of people that would blow it and lose money off of that. Why? Because they wouldn't manage their, this one's got to be the winner. I'm going to take 80% of my account and put it on this one trade. Turns out that was the loser, even at 90%. That was one of the 10% that lost. Well, I bet all my account on that one. Well, then you're the idiot. And that's true. It's a true story from when I first started working with Bob. He was running a seminar, and he used to give along with the seminar, some signals would go out, which is why I hate signal services. I'll do something for long term again, like for some stocks. But next time I do that, I'm also going to literally teach people exactly what I'm doing so they're not dependent on me, which will probably kill the product. That's why I suck at this overall, for turning this into a money-making venture, because I'm more worried about people actually learning the stuff than me making money off of it. But, again, some woman came in. I'll remember it to this. I remember it to this day. Like it was in currencies. And FX can be traded quite well. But the first three calls, they were literally off doubles, I think. The first three double bottoms it triggered happened to be three losers in a row. And these weren't even the higher probability ones I'm teaching. These were Bob doubles, and I've gone to take them to a whole nother, about 10 percentage points higher than what he was teaching. But so the first three signals, loser, loser, loser. And the lady's like, I followed your first three signals, and I had a 10K account, and she put like over $3,000 on each signal. And they were literally the whole thing on the, if it gets stopped out, not do I just take a loss, I lose that $3,000. Three losers. And she's like, your stuff doesn't work. Your stuff stinks. It's horrible. It's horrible. It's horrible. You just blew up my account. And because I wasn't teaching then. It's like, who told you to take a third of your account on the first three trades and put it all in there? And he used to teach risk management too. You got a position size. It's one thing he's always stressed, position sizing. You don't, you take, look, even if you were just risking 5% of your account on those trades, you wouldn't be damaged. The next 7 trades were all winners, by the way. She happened to take the first 3, blew up her whole account. When after 10 trades, it came out to 70% probabilities. So you don't manage risk, you blow up your account. But people don't care about that. They want the sexy. They want the sexy system. You give them a sexy system. Look, I've had people learn the doubles, and that's in the 70% if you learn to trade them right, easily in the 70%. There are people that lose money on them. And I'm like, how? Well, I took 30% of my account and I put it on this last trade. The double looked really good. Okay, well, who told you to take a third of your account and put it on one trade? But it looked so good. Well, how'd you know it was going to win? There's nothing that changes the problem. If there's something that magically changed the probability for that one specific trade, I would have been using it. I don't know which ones are going to win and lose. If you knew which trade would win and lose before you got in it, you'd never get in a losing trade. So how can you then say I'm going to take a huge percentage of my account and put it on one single trade? How do you know? Now, the worst part is when people do it and get away with it, then they, oh, well, take half your account and put it in this stock or this trade. What happens when that one's a loser and you wipe out a bunch of people? Jeez. It's not the way it works. That's gambling. That's not investing or trading. That is literally gambling. And you generally hear about all the people that did something stupid. Oh, I took 100,000 and turned into $1 million on one trade. You don't hear about all the other people who took 100,000 and ended up with zero. Why? Because either they're not talking about it or they've gone away. You hear about the morons that took 100,000, put it all in one trade, and turned it into $1 million, and then they're trying to tell people everyone can do it. When they were one of the friggin' lucky ones that got away with something. But you don't hear about all the people who are taking it in the shorts and blew up their account and now have gone into the corner. Or have to take a second job because they followed along and now they're trying to recoup their losses and they lost their nest egg following some idiot that got lucky. So, is there an aggressive buy in the S&P tomorrow? Yeah. Do you take a huge percent of your account tomorrow and do it? No. Most people shouldn't be taking more than 2% risk a trade of your account size. Think about that. That's why if you got to trade futures, the micro futures are so fantastic because you can actually trade it. And you can position size it. All right, probably lost everybody here. Why the SEC don't? The SEC's gone to garbage, Coco. Hello, Lauren. The SEC, you know when the SEC will do something? I'll tell you, all right, if you're talking about the stock that she'll be named, when that stock drops in half, the SEC will start looking at stuff. Until then, they won't do anything. The SEC's like the firefighters that show up after the buildings burn down. And they're spraying water on the ashes. Woo! Spraying water on the ashes. Look. Where were you during the fire? That's the SEC at this point. They couldn't find a fraud. Look at how long it took with Madoff. People were given that information since the year 2000 about Madoff. His returns, they actually don't mathematically even make sense. People march the information into the SEC and they, look, there's lots of people investing with him. He won't do he got great returns. Then when do they, it blows up. Now let's look at, we're shocked at this fraud. That's when the SEC does something, unfortunately. And instead they go pick on the short selling firms. Like they're the friggin' market manipulators. You want to know the most people who uncover fraud in this market? The short sellers. Why? Because their revenue stream depends on it. The SEC isn't smart enough to figure out anything at this point. They're chasing the horse out of the barn after the barn's burned down. Jeremy Grantham said the super bubble is breaking and the end will be epic. When the super bubble does break, the ending will be epic. And you know why I'd actually like it to break? Not because I want people to lose money. Because I think we need, and I'm not talking about the Great Reset and all that garbage and all these friggin' morons trying to control our life. I'm saying we need to get a reset with these policies, with trying to constantly prop up a market, with trying to flood it with cheap money, trying to blow bubble after bubble. That's what we need reset. Don't get me started on the Great Reset either. Lost to no one. This is great. Lessons to live by. Well, then I better wrap it up, Patrick. I don't want to ruin your dinner. Don't get your wife mad at me, Patrick. Hi, Mike. Found your channel. New subscriber. Well, thank you, Ravi Y. Did I say your name right? I really appreciate everybody that subscribes. I'm going to wrap this up soon. We'll be back tomorrow morning with retail sales. I do appreciate every new subscriber. And if you found this information helpful and you know other people that it can be shared with, please have them try to watch at least one episode. One. And see if you can help pass it along or find another channel, more entertaining than mine, that gives good information, and help them out that way. Steer clear of pump and dump channels too, or just people that don't know what they're talking about. A $5,000 account can handle a 20-point move against your trade in the micro S&P and stay within the 2% loss category. There you go. I really like micro futures trading. You can also day trade them with no PDT. See, you don't need a big account. You want to know, and you can sit and trade the micro S&P, and that is some good trading. And you don't, a $5,000 account, you know, that's not a huge account. And even if it takes you a while to learn, you're not taking a ton of risk. A 2% loss, what's that? What's 2% of 5,000? $100? You can take $100 loss. If you can't take $100 loss, you shouldn't be trading. You need to build up your account more. You save up until you can get the $5,000 account. And then you can take sensible risk. But you can take a lot of $100 hits before you blow up a $5,000 account. You can't take a lot of hits if you're betting 1,000 or 2,000 per trade. You get a couple hits, you're wrong, your account's really in the dumps. You're welcome, Gary. Again, thank you for being here. I guess I'm just in Mike rant mode. I will see everybody who still wants to tune in tomorrow morning. If you missed what I was ranting about earlier, it's probably worthwhile to rewatch. Maybe put on your grill and listen while you're grilling. You don't even have to watch. Just listen to me in the background. With that, I will talk to everyone tomorrow morning. Have a wonderful, peaceful evening, everybody. Enjoy time with your friends and family and loved ones and pets, dogs and cats. I'm going to go walk my 5 doggies now. And I'll talk to everyone later. Bye. You're welcome, Ted. Bye. Glad you enjoyed it, Gary. Bye for now.